consider this a professional courtesy.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am that Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. With you once again as we wrap up another week. As always, the hope is that you've achieved all your goals for the week. If not, let's try to queue up a better plan for getting it done next week. I want to thank Scott Blasius, our favorite real estate agent in Sacramento, California, for reaching out. He shared with us an interesting article relating to some interesting numbers. I think it's always good to stay up to date on what's happened and what folks are thinking. And there's a lot of that at this time of year, right? When we get a lot of folks looking back over the year and trying to give us some insights into what we might expect in the coming year. So we're going to do that. This is from the VeroForecast. That's the real estate outlook, the strongest and weakest markets for 2018. So kind of a look forward, but also it is basing a lot of this on what's happened in 2017. But they're trying to tell us what's going to happen over the next year. So it's good to listen. Let's sit up and see what they have to say. In other news, before we get jumping into things, let me remind everyone how to get in contact with me. The best way is to head on over to the website, therebelbroker.com. From there, you can click the contact button in the menu bar and send along any ideas, suggestions, observations, or questions that you might have. Happy to entertain them. Or maybe you've got thoughts about a subject we've covered here on the show. You can go over and share it via email, or you could go to the Facebook page and share and discuss it there. We could go to the Google Plus page. Lots of different ways for you to interact with the show, so feel free to take advantage of those. You can also join the Rebel Underground. Now, that's an elite cadre of hardcore folks who like the show, want to hear more from the show, and will, as a member of the Rebel Underground, as we move forward into 2018, we're going to have a much more robust approach to what the folks in the Rebel Underground get. I've always sort of erred on the side of not bothering folks and just sort of really only calling out really big things. But I've actually had enough people reach out and say, hey, I'd like to hear more from you. I enjoy the show, and I'd like to get more info on various things and some other content that is maybe not so easily delivered on an audio podcast, maybe video content, that sort of thing. So I'm going to make it a regular thing for the Rebel Underground. And if you'd like to join the Rebel Underground, there's a couple of ways to do it. One is to text the word Rebel Broker to the number 44222. That's take your cell phone out and text the word Rebel Broker to the number 44222. You'll get prompts so that you know you're reaching out to the right people. And then you can send along your info for us to stay in touch. Or if you go to the website, therebelbroker.com, there will be a link there for you to join the Rebel Underground. Finally, if you'd like to support the show and also put your hat in the ring to win a $50 Amazon gift card, click the big red button at the top of the page at therebelbroker.com. It's titled Take the Survey to Support the Show. You'll be asked a handful of demographic questions. Use the same email address both times you're asked, and you will have not only helped the show, but you will have entered yourself into a $50 Amazon gift card drawing, something we do every month. Okay, so let's jump in. Before we jump into the meaty stuff from the VeroForecast, I thought I would share with you something that's also one of those items that tends to influence what happens in a market. And while the number itself is a good thing, I mean, you like for this to be true, it can also then inspire people to start to take actions, which introduces higher levels of risk. So the headline from Bloomberg Markets is U.S. consumer comfort rises to highest in almost 17 years. Americans' confidence began 2018 by rising to an almost 17-year high on greater optimism about the U.S. economy and buying climate, according to the Bloomberg Consumer Comfort Index released Thursday. Now, I'm willing to bet that all of the data that they got from this was tabulated, taken before any companies were announcing we're going to give our employees $1,000 or we're announcing various things relating to positive things on how they're going to be distributing the savings they're going to get from the tax plan. So, and whether you believe that's really a thing or not isn't the point. The point is the impression that it makes. So my feeling is that if we simply had delayed collecting this data by a week, we would see this being even stronger than it is now. So let's go with the highlights from this. And again, as always, I'll include in the show notes for today's show a link to this article so you can check it out for yourself. Make sure I'm not misrepresenting any of this data. First, the weekly index rose to 53.5. That's the best reading since March of 2001, which was 51.8. Measure tracking views of the economy rose 55.8, also the highest since March of 2001. And remember where we were in March of 2001, right? That was all kinds of good stuff. That was the high tech stuff was really booming. I think that was actually before the bubble burst on the high tech stuff. I think the bubble burst at the end of 2001, beginning of 2002. So lots of optimism there. Real estate was also doing very well, but we were at the beginning of the ramp up in real estate. Things hadn't gone completely nuts yet. Comfort measure of buying climate rose to 44.6, the second strongest since August from 42.5. And personal finances gauge improved to a 2-month high of 60.2 from 59.4. And the takeaway, according to the good folks at Bloomberg, is that Americans are optimistic about economic conditions as unemployment remains at the lowest since 2000 and stocks continue to rally. Subtle inflation has also contributed to upbeat attitudes about the retail environment, which could continue to stimulate consumer spending after a robust holiday shopping season. So that's some of what I want to get at. So this is good in that people are more optimistic. Optimism works for us and against us, as I pointed out before. It works for us in that it makes people feel more comfortable with making big decisions, like selling their house, relocating. When you get an economy where unemployment is relatively low and people feel like they have options, those decisions relating to relocating for better opportunities become less of a burden, and they potentially are going to put themselves on the market in terms of selling the home they have now. We've also seen that earlier data we looked at indicated that we'd seen an increase in the number of folks who were open to the idea of selling their home in 2018. You mix those two together, that could easily equal an increase in existing homes on the market, which would be great in general. The flip side of that is it inspires actions that can build on the problems we've talked about. Remember, one of the things we've talked about on this show is sort of the debt profile that the average person is holding on to. We talked about numbers last week where we saw that income grew 0.03%, but spending grew 0.06%. Remember that? Well, that's not a good thing, but it's absolutely reflective of this kind of a thing. I'm willing to take on more debt when I'm confident, when I feel like things are good, when I feel like my job is secure, and I think there's a good chance I'm going to get a pay increase. And with a lot of folks getting more money and feeling like they're more liquid, those decisions get easier to make. They feel less risky. Given the other challenges we've talked about, a more frivolous attitude, I hate to use the word frivolous, maybe that's one step too far, but a more open attitude relating to taking on more debt, I think could actually work against us. So I think feeling a little bit more conservative about taking on your debt would be a healthier thing, but we're always going to sort of get those folks who really embrace it when things appear to be going well. Now, other details that are discussed in this article: gaps in confidence by income remain large, with an index of comfort among those in the $100,000 plus income bracket exceeding sentiment among those earning less than $50,000 by about 36 points. Comfort among Democrats surged to the highest since August, while Republican sentiment was strongest since May of 2007. Comfort gauge of consumers in the Northeast was the highest of all regions and at an almost 17-year high. That'll be easy to understand when we start talking a little bit more about some of the market numbers relating to real estate. Homeowners, men and senior Americans, were more upbeat than at any time in almost 17 years. So there you go. I think all of that comes together to paint a picture of a market where we could easily see a lot more activity on the housing market in terms of not just people being willing to buy because they're confident, which is also concerning, right? Because if folks have that higher level of confidence, they're willing to go in and potentially pay more than maybe they should for property. They're willing to buy into the feeding frenzy that seems to happen when prices are as crazy as they are now. But with any luck, we'll see an increase in the amount of inventory out there, and we can hopefully offset that a little bit and keep things under control. All right, so as we move on here, let's discuss these stats. I think they're pretty interesting. Let's hope you do too. According to the folks at VeroForecast, their projection is that over this next year, we're going to see 4.2% nationwide home price appreciation over 12 months. Only 3% of U.S. markets are expected to depreciate. So that's a ridiculously small amount of folks who are going to be on the negative side of this in terms of seeing their property values decline. Now, in terms of regionally, where are the big winners? And we just talked about where was all that confidence? Who had the highest confidence? It was the folks in the Northwest. Well, that's also true here in terms of where the markets remain the strongest. The Northwest was the strongest. The top 5 are in the Northwest, with Washington State dominating all top 5 spots. Who is the worst? The Northeast. 4 of the 5 weakest U.S. residential markets were in the Northeast. 4 of the bottom 5 are located there. So that's interesting to note, and particularly to take a look at that, not only from the standpoint of should I include this as a place I review for my portfolio, but should I exclude it? If you've got areas that are already booming, right? Because our goal is to try to jump in on situations like this on the upswing. Right? You want to try to you want to make 2 good decisions. You want to make a decision to go into a marketplace where there is market momentum that can carry you once you've made your purchase, but also you want to be in terms of just the value of the property, but you also want to be in a marketplace where you're seeing a continued sustaining of a robust renter economy so that you are able to be in the black for your entire period. So you can be positive cash flow throughout the entire time that you're owning that property. Okay. The top 25 markets. Now, in the top 25 markets, the VeroForecast projects 8 to 12.3% in terms of home appreciation over the next 12 months. Now, 15 of the top markets are in the Pacific Northwest. Number 1, actually, let's go to number 5. Number 5 is Mount Vernon, Washington at number 5 with 9.5% expected increase in appreciation. Number 4 is Kennewick, Washington at 9.7%. Number 3 is Bremerton, Washington at 9.7%. Bellingham, Washington is number 2 at 9.9%. And Seattle, Washington is number 1 at 12.3%. So what do we do with that? I think there's a lot of interesting potential opportunities there. And I think what we do is apply some of the theories that have worked when we've had this same conversation about other markets. Now, remember back when we were talking about San Francisco, this would be a few years ago, before things were going completely nuts in San Francisco. And we were talking about as things were going nuts. We were sort of hitting the top end of the marketplace. And suggestions we made when we were at the very leading edge of that phenomenon was embrace the mushroom effect, right? As places like Seattle, Washington just get completely nuts, you're going to see people looking at areas outside of Seattle. We saw that in San Francisco, where suddenly areas that hadn't been so hot before got hot, because they were within an easy commute of there, so you kind of get this area where it spreads out and you end up finding marketplaces that are going to grow as a result of that. You should apply the same theory to these areas. What are areas that are just outside of these, maybe the suburbs of these areas, that are going to represent good opportunities for you, or maybe even neighboring smaller towns that could easily feed into these areas? It's a great way for you to potentially ride a wave that's already taken off, right? You're too late maybe to get in on Seattle right in downtown or right inside the city limits and get a lot going on, or get a really good deal that's going to have some high end left to it, or have some more life left to it in terms of how much more it's going to grow. So why not jump in on an area that can benefit from the growth of Seattle, because there's going to be plenty of buyers who simply can't jump into that market that are going to see a 12.3% jump in prices. Now, some of the drivers, some of the things that the folks at VeroForecast believe are the drivers. One is population growth. Absolutely true. We were talking the other day about where people are moving to. Idaho was number one, but right up there with it was Washington. So people are still continuing to relocate there. I'm still continuing in terms of ground truth. I'm still continuing to see people do that from here. So that's absolutely still the case. Okay. Low unemployment is the next big factor here, and I don't disagree with that either. I think that's absolutely true. In terms of the ground truth, I see a lot of folks that are talking about job opportunities in the Northwest. I get people talking about being able to relocate and confident enough to relocate even without having a job in their pockets. So I think that's an interesting trend as well. And then finally, the fact that there's low inventory in these areas. And I think, of course, we're seeing that everywhere. That's not just something that's having a profound effect in Seattle and other Northwestern areas, but it's something that's common throughout all real estate. All right, folks, we're going to take a quick break here for a second, but then we'll continue to cover this VeroForecast projections for 2018 and see if we can't pull anything out of this that'll make us make better decisions in our real estate world. So don't go away. We'll be right back.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner, broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
Welcome back, everyone. We are covering the VeroForecast projections for 2018, trying to get some insight into what we might expect in 2018 and also to help us guide our investment gaze in directions that might give us the biggest bang for the buck. Where are areas that we could really see a better payoff for our investment in time, money, and effort to make the best choices we can. One emerging trend that they note when we were talking about these top 5 areas, how they were all in Washington, some emerging trends that they point out are Dallas and Austin, where they see those markets softening and dropping 1% in forecast appreciation. So they actually think that they're at the top in those areas. I don't necessarily disagree. I think that there are still a lot of long legs left in the Texas market. But I think one reality is you don't necessarily have to be right in Austin or right in Dallas. I mean, there's the Dallas Metroplex, right, which is just a gigantic area. But the area around Austin, for instance, I think is still a great opportunity. We've talked about Round Rock before. It was one of those communities we talked about 2 years ago. I think the year before that, so 2.5, 3 years ago, we talked about Red Rock should be the first place we go as a show to visit and potentially invest, because I think it'll be fantastic over the next 12 months. And sure enough, that following year, it did gangbusters and ended up being number 1 in growth that next year. So we called it accurately here. Of course, with the help of stats like this to help us try to see what was over the horizon. But you know what? There is so much going on here in terms of job opportunities and everything else. You may not be able to enjoy as much growth in terms of equity, but I think if you go in there and you buy right, you're going to still be able to get properties that will be good returns for rentals. But it's just a question of maybe having to be a little bit more aggressive. And if we do start to see a dropping in these prices to the point where that's actually happening, where we're seeing property values going down, I would look at that as an opportunity to be more aggressive in terms of your negotiating and just jump in there and make that stuff happen. All right, now let's jump over to what I think is another great way to look at data like this. What are the bottom markets currently? We mentioned that the Northeast was really sort of dominating that. The VeroForecast projects that there will be a 1.2% increase to a 2% decrease over the next 12 months in these areas. Bangor, Maine is forecast to be the worst performing market. Reasons that they are coming to these conclusions: high inventory of homes, long-term flat to declining population, higher than national rate of unemployment are key factors in the Northeast region real estate forecast. The 5 weakest markets, starting at the 5th weakest, with an anticipated negative 0.7% in property values: Atlantic City, New Jersey. We should remember, New Jersey features on quite a few of these studies that we get that indicate maybe it's not the greatest place to invest. A couple of years ago, it was and I don't know, I haven't actually seen the data for the most left states. I don't think it was number 1 in 2017. But a couple of years ago, New Jersey was the most departed state. If the most trucks leaving a state were coming out of New Jersey. I understand there's very burdensome taxes in that state. Property taxes are nuts. So it kind of makes sense. Now, next on our list at number 5 is Vineland, New Jersey, with an expected drop in property values of 1.1%. Longview, Texas, and this one kind of surprises me. It's number 3 on the list, and there's an expected 1.1% drop in property values. One thing that surprises me about Longview is I actually have family in Longview, so they're likely to not be seeing any more acceleration in their marketplace. Now, returning back to the Northeast, we're going to go to number 2 on our list, which is Bridgeport, Connecticut, where we expect a 1.3% decline in property values. And then finally, as we mentioned at the top there, Bangor, Maine rounds out the number 1 position here as the worst market, with an expected decline in property values of 2%. There's an awful lot of other places here I'm going to go ahead and fill out the top 10 here in terms of the worst. Right where we kind of hover over where it shifts from being positive to negative. Lafayette, Louisiana is number 10 with expected 0.5% increase in property values. Charleston, West Virginia expects to gain 0.3%. And then everything from here on is negative territory. Number 8, Farmington, New Mexico is expected to see a drop of 0.2%. Trenton, Ewing, New Jersey is expected to see a drop of 0.3%. And Peoria, Illinois is expected to see a drop of 0.3. So that rounds out the top 10 worst. I think all of those are interesting, and when you look at the reasons why, right now, as an investor, inventory is less of a worry, right? I like to have inventory to choose from. I think that's a good thing. But if you're seeing trends in population and unemployment, those are the cornerstones of what makes a strong renter base, right? You want folks who can be able to get jobs relatively easily. If they lose a job, find another one. You don't want drops in population. You don't want to be the person who adds another rental home into the marketplace when populations are declining. Clearly, whatever is already out there, if is serving the need, and you simply become another one, which means you have to drop your prices. So I think it's real tough to potentially make things work in a market like that. And so you need to be smart about understanding what's happening with markets you're interested in terms of population growth and unemployment. Now, the trend they point out on the bottom side is 15 of the bottom 25 markets are in the northeastern states. So the Northeast in general is doing a lot of suffering. But there's going to be plenty of other areas that are doing just fine. I don't see anything on the downside list in Idaho or in Tennessee. And remember, we've had guests on the show who've talked about Tennessee. They've talked about Georgia. I still think those are prime areas. I realize this is one I've talked about for way too long. For those of you who listen to the show for a while, I can't help but think when I start talking about Tennessee and Chattanooga, you just scream at whatever device you're playing this on. So shut the hell up and go there already and get it over with. It's on the plan to do. I know it has been forever, but I really like the numbers there. I continue to look at it. I still get message. I still subscribe to new properties that come on the market in some of these areas, and I think there are just some great opportunities there. And if you're looking for that first place, if you're someone who's been saving and you want to invest, I think you look in these marketplaces that are showing the good numbers. You know, there's parts of Atlanta, for instance, that I think are great opportunities. Now, I don't know the Atlanta market that well. I know enough about Atlanta to know that their economy is diverse enough that there's going to be opportunities there. There's always going to be tenants there. In some of these other areas where high tech has really become a cornerstone of their success, again, I think those are areas where you're taking less of a risk because the high tech side of things is going to continue to play a huge part. All right. So that wraps up the VeroForecast and projections. Thanks again to Scott Blasius for sending that along to my attention. I appreciate it. It's always good to get other insights on what the expectations are for 2018. Of course, as always, the hope is that you have walked away with far more value from the show than you've put on the table in terms of time invested. Hope we've achieved that today. Thanks again for listening, everybody. I'll talk to y'all next time.